Good morning, natural gas, gold, and silver traders. Not only will we be doing technical analysis today, but I'll also be giving you guys the psychology behind the price action so you guys can better understand what's the most likely scenario that where the stock price will be heading into next week. And if you guys want a stock market update where I do S&P 500 as well as QQQ and the Mega 7 tech stocks, so that'll be NVIDIA, Tesla, Amazon, Apple, Google, Microsoft, and Meta. Check the video out from yesterday, and the link would be below as well in the comments. All right, let's get started with natural gas. So natural gas had a rejection from the resistance again on Wednesday. So you can see that after testing this 2.8 to 2.86 range multiple times, 4 times here, we tried it again for the bulls on Wednesday and cannot get over it. This rejection is a little bit of a red flag for me for bulls after trying so many times up here. So it's a good sign that there is bulls actually buying, meaning um, bulls actually trying to buy dips to test resistance versus back here. You can see every time we test the resistance one time or one time here, we just always fade away. Just not a lot of bulls looking to buy natural gas back here. So when we have something like this where reject a couple of times, bulls buy the dip again to try again, reject, and try again. That means there is some buyers around these levels, and let's see where the next level of strong support is going to be when we do hit that. So I was talking about that we wanted to hold 2.6 to 2.62 range, and we currently broken that below that, and we have confirmed a daily downtrend for the bears because we have broken this prior pivot. This Thursday's pivot right there. The low is 2.616. Now the bears have the daily trend back in their favor. So now it's a daily downtrend. So where's the next level of support? The next level of support is pretty much exactly where we bounce off of it on Friday. You can see right there. There's a couple of supports back here from once we broke out of this huge wedge after a couple of months. You can see we have 1, 2, 3, 4 times around this level. And currently we tested exactly that spot and bounce off of it at the moment. I wouldn't say this is a bounce that we're going to just test all the way back here again because I want to see the trend. So we zoom in to the hourly trend to give us better understanding of who's in control at the shorter time frame at the moment. So at this very given moment, the bears are in control of the hourly trend. So what I want to see from bulls. So let's start with the bull scenario. I'll give you guys the bull and the bear scenario on both sides. I'm not in the stock, so I'm not going to be biased in either side. So the bull scenario is we take back the hourly uptrend. So you can see this is the initial move, this is the pivot, and bears have confirmed a hourly downtrend after breaking the prior pivot low. So now the bulls need to do the same thing. If we are going to be serious about holding this support, we're going to bounce, big enough bounce where it makes enough room, right? You want enough room for the price action where the next drop will give us enough room for the bounce, right? If we only bounce like this much, right? Where are we going to have room for the next pivot? We drop a little bit, we already give back 100% of it, right? There's no big enough bounce. When we drop, have room for the bulls to work with, where they buy it, the pivots, and then bounce, forming a hourly uptrend. So that's the best case scenario for bulls to straight back up to over 6.62, 2.66 again for this prior resistance or support. It's going to act as resistance now because we are under the price. If we can just get over a cut through bracket, that's a very, very good sign for the bulls. And I will again act as support when come down to it. Best case is bounce above it, straight above it, come back, retest, and it acts as support again. Bounce off of that. It'd be perfect. We're likely to test this 2.8. And for you bulls, we're going to go to $3. So that is the case scenario. The best case, I would say, is we do that on Monday. That would be a bear break, lack follow through. Um, this was a bear break, and then no bears want to sell anymore, and there's no more people wanting to short, interested in shorting in these levels, and they still think natural gas is too cheap down here to short. That means it's a bear break, black follow through if we shoot back up, especially on Monday. The less time we spend underneath here, the more it is. It would be a bear break lacking follow through. Obviously, if we start to spend a lot more time here, chop around, close a lot of candles down here, then it's a confirmed break already. But we still have a chance to come back. Doesn't mean it's over. Both these prior pivot levels. Bulls, you want to hold this 2.538, which is the support of this zone. And if that breaks, we need to hold 2.47, which is the top of the next zone. So the top of this zone, right? That needs to hold. Otherwise, we're going to coming back down to this next zone already. Last level, I would say 2.368. That definitely needs to hold. If we don't even hold that, then it's probably game over. We're going to come down to test bottom of this wedge, which is 3-1 level. And that is still 10-11% away from. So yeah, so we have 1, 2, 3, 4 support levels to break. Before that breaks, we're probably going to confirm that monthly bear flag. I'll show you guys in a second. But as of now, we slightly bounce off of it. So we'll see if the bulls can regain it on Monday and take back their control. But we still have the weekly uptrend in favor of the bulls. So you can see initial move, big enough, pull back where we have room for bulls to work with. This low didn't break the prior low, confirm the weekly uptrend right there. Same thing. This low didn't break the prior low, confirm the weekly uptrend right there. Pulled back a little bit, still on a weekly uptrend because we haven't broke the prior pivot, even though the prior pivot is like a million miles away. So I've started the consolidation now, which is pullback. Prior candle, right? Below the prior candle. So let's take a look if it's a weekly bull flag or not. Just from looking at it, we have pullback probably more than 0.382. So I don't think it's a weekly bull flag anymore. Yeah, we are on the 50% mark. So this is A to B move. So from the bottom to the top of the move, now we have pulled back 50% of the move. We have given back this 50% of this one to this to move. So Fibonacci retracement will act as resistance support depending on where we are. So now these levels will act as support, especially the 0.5 line. So the bulls will want to hold over 50% because that gives the chance to form a bounce. So the probability of the bounce is a lot higher when we only retrace above 50%. If the bears are able to take it down below 50%, then the next likely scenario, next bounce, big enough now, the next bounce, it could form a weekly downtrend, but we are above the 50%. So next bounce still favoring the bulls at the moment. So this support zone is very, very crucial. So this support zone confluence with the 2.53 support zone. Back to the daily chart. This support zone right here, right there, is exactly the same spot as the 50% retracement. So it's a very key battle zone for bulls and bears. Bears definitely at momentum, and bulls definitely want to hold this level. Have a higher probability of the bounce. Obviously, it's not 100% of the bounce, but it increases the probability if we do bounce from that 50% retracement. And yeah, so these levels are the levels that you guys want to get to. I talked about earlier, where if you do bounce. Bear scenario, want to break that 50%. So that is the spot that you break the 50% retracement, right? So that means that gives you guys a lot of room now because of how big this pullback is. If you do break that 50% retracement, where the next bounce, you'll be looking for a lower high, meaning the high of the pivot is going to be lower than the prior pivot high. So that would be bears would be adding back their shorts. That's how size of the retracement of the psychology works. And so very key for you guys next, especially Monday. We'll see who's going to win this battle. And if we do get that drop, we're coming down to 2.46 for you guys, for you bears, as well as if we don't bounce here. It's a very shallow bounce because the size of the retracement is so big already. And then we're going to probably test this 2.36 zone, which is, I would say, the strongest support there is because of how many times we have been trading that range. Bounce off of it 5 times here. When we're below it, you can see rejected from it multiple times back down here. If you come down here and you have shorted up here, I would probably cover down here, at least partially, and then set your stop losses close by in case we reverse. So that would be the bear scenario, and monthly bear flag is still on the table. Let's see, so same thing from the top of the move to the bottom of the move. That's not what I wanted. From top of the move to the bottom of the move, bulls have only retraced, not even 23% yet. So that's probably like, let me see, roughly 20%. So as long as we don't get over 38.2%, is a bear flag. So this is still a bear flag on the monthly chart. Gotta be a little bit cautious before anything happens. But bulls have a chance to potentially set up a monthly trend change here, but that would take us to months. So let's say we get a so we trade sideways this month, right? And then we get a small candle here that closes below. Doesn't have to close below, just have to go underneath the prior one. So underneath this month candle, and then so that'll be today, July, and the next candle is August. And then when September rolls around, we had a green candle that breaks above this one. So this June's candle, whereas the high would be 2.878. So if you break above that, that's a confirmed monthly uptrend for the very first time since any of us will be able to remember, because I remember us seeing one since let's see, since back here. There's one right here. This was a monthly uptrend confirmed right there. That'll be June 2021. So that's 2 years ago. That and yeah, that would be very notable for me if that happens, where we confirm a monthly uptrend. Then the momentum, I would say, would be in bulls' favor. Once that happens, then we're likely probably going to test these levels again. If we start shaping up structural changes in the chart, where monthly, weekly, and daily uptrend is going to be now, daily trend is in favor of the bears at the moment. So daily trend change, daily is in favor of the bears right now because it's a daily downtrend. But weekly trend is in favor of the bulls. Is a weekly uptrend. So and the shorter time frame is currently favoring of the bears in the hourly downtrend. So for you bulls, you want to see hourly uptrend back to you guys' favor, and for you bears, you want to continue this hourly downtrend. So the key battle zone right there, that 50% retracement at 2.53. All right, let's take a look at UNG. UNG is the tradable ticker for natural gas, and we are also in an hourly downtrend. So very similar to NatGas because it follows NatGas. So as long as the bulls don't get back their daily, the hourly uptrend, then it's looking like they might also break the support if they don't continue to hold that level. So very similar. It looks like a 4-hour head and shoulders. Let's see here. Yeah. So This is the right, sorry, the left shoulder, head, and this is the right shoulder. So head and shoulder, it's just a pattern where it goes from an uptrend. Psychology of the pattern just going from an uptrend, right? This is a 4-hour uptrend into a 4-hour downtrend. And once it breaks this neckline, it would be a confirmed break, even though we're already in a. This key level support coincides with natural gas is this 2.56 level, or where it's also that 50% mark. So if natural gas breaks this, obviously, I'll be watching NetGas more. Trading this, you want to chart both at the same time. So, and Boyle is just a 2x leverage ETF for UNG. So if UNG goes down 2.5% on one day, Boyle is going to be down double that. So Boyle will be down close to 5%, right? And KOLD is a short 2x leverage. So you want to see UNG go down because you're shorting. So if UNG is down 2.5%, KOLD will be up 5%. Yeah, but you don't want to be charting the leverage charts because leverage chart always it messes the chart because it's leveraged. And I'm explaining more of that tomorrow. I'm doing a leverage 3x ETF charting tomorrow where I teach you guys how to scalp, day trade, leverage ETFs to make money every day, or you know how to trade every day, but just to give you guys a better idea to how to trade these leverage ETFs. All right, let's take a look at gold. All right, very choppy and interesting. Still in the wedge. So we've been looking at this falling wedge for a while, and tested it twice, and we're still inside of it. And so it's attempting for a daily trend change here. Very, very close. So you can see right here, bottom of the move to the top of the move, and then right there, and then we dropped. Now this low is higher than the prior low, so that's the pivot now. So we need to break the prior highs, but we didn't. We had a double top, right here, double top with the Wednesday's high. So for that, the daily trend change is not back yet. So if you on Monday, you try again or break above this double top as a confirmed daily uptrend. For since, let's see here. Since over here, nope, didn't make a new high. Since over here, initial move, pivot higher than the prior low, made a new high right there, broke the prior pivot since April. If that happens, we also bullish out of this falling wedge at the same time. So that'll be a good sign for the bulls if we do break out here. I'm breaking bullish. And we're holding this line 4 times, right? So you can see this black looking line is a strong support that goes back here. Support. Hold that support, uptrending support. So yeah, this is a very, very key level for gold traders to hold for sure, because this support also confluence with this orange looking line support, and also close to this bottom of the wedge support. So we've been bouncing off of that many times. So it's looking decent because you can see this level support is also here. Here. Strong resistance there. Now we're above it, so it should act as key battle zone for you guys. Very key right here for your bulls. But so far, bulls are holding, but bulls are playing a lot of defense. We want to see some offense coming in from bulls because you need offense to make money. Even though it's holding, it's not really going. Offense come in for you bulls to gain some money on the goals. These are support, holding, and still holding, and so far it's rejecting from here. All right, let's take a look at silver. So silver is a little bit different than gold, but they trade very correlated, and you can see silver already confirmed a daily uptrend here. So this is the initial move. This is the pivot, and we broke above the prior high of the pivot. So that's a daily uptrend confirmed, but it's very lacking follow through from the bulls. You can see once we confirm that daily uptrend, there's just not a lot of buying left, and we have come back. Test this slightly because why is not even, yeah, that's better. So we are coming in and testing this falling wedge of the resistance very soon, just like gold is. You can see rejection, rejection, and that looks like, yeah, that looks a lot better. So we will want to see gold confirm its daily uptrend and break out of this falling wedge. For silver, also breaking out at the same time. That would be the best case scenario. And silver is still holding the 200 EMA. This is the average type indicating type moving average and type 200, and you'll get this. See if silver will break out. And as of now, both silver and gold are holding support, but bulls are just playing defense, not really going anywhere. And so we want to see both gold and silver playing some offense and break out of this, come from a daily uptrend, and also silver breaking out of this falling wedge as well. So burdens on bulls to play some offense. All right, that's all I got for you guys, and have a great rest of you guys' weekend. If you guys made it this far, feel free to subscribe and make sure to check the video out tomorrow. So tomorrow is going to be a different video. You know how you usually just do tech stocks, but I've been doing them every day now. So Sunday will be something new. So Sunday I'm going to start doing things to, yeah, different things. So tomorrow I'm going to be looking at 3x leverage ETFs where you can trade these ETFs and to up your day trading game, right, or your scalp trading game. And sometimes you can hold them for a short period of time as well and make some money scalping. All right. I'll see you guys tomorrow and have a great rest of you guys' weekend.